Hi, I'm JB Bryan, the Chief Investment Officer and the President of JB Bryan Financial Group, a registered investment advisory firm. Thank you for hanging out with me today. I'm excited about this opportunity to talk about some of the things that we're going through in today's marketplace. Today's topic is about terrorism and your money. Terrorism and your money, or how terrorism is impacting our financial markets. And the important thing is for us to have this discussion, because I think we don't know who to talk to or who to discuss things with during times like this, or don't even think about it. So I'm glad I see more and more, from my perspective in the financial services, we're talking about it more and more. But my challenge and my goal is to bring AfroEconomics to you, to actually bring these topics and discussions to you. So please make a point to download the AfroEconomics app so that you will get notifications, and you'll have access to any postings that I make on social media. And it's an easy way to come right into our live stream and our discussion of what's going on in the marketplace each Wednesday. And sometimes I do them on Saturdays also. And if those are convenient for you, you'll know about those as well. So I also wanted to talk to you about subscribing to the YouTube channel. That's another way to stay up on your financial topics. And this is AfroEconomics with JB Bryan, and we're talking about terrorism, the financial markets, and your money. So the first thing I want to discuss is some tips about, and what we're going to really focus on is why this is significant for you, what you should be thinking about in these turbulent times, because over the last couple of weeks, there's just huge discussion. I mean, I'm a news junkie, and every time I watch news, 90% of the discussion is about terrorism, protecting our country from terrorism. So what about how do you protect yourself? And so I wrote down some key points, and I think that we want to focus on having a cash reserve, having liquidity, having money available for you to protect yourself through anything that might happen, through any type of major event that might impact our economy. We need to make sure that we have cash available. There's really not a rule of thumb about how much cash to actually keep at home, to have in your safe, to have available to you. But I think that we need to have at least 1 month of expenses of your cash reserve that would be available to you, even if the banks could not open. We've seen internationally sometimes where the economy in a country has gone through some situations, and they actually were limiting the amount of money that you could get out of the banks during that time, where in order for you to do that, in order for you to not be a victim of only $50 a day, but actually be in a position where you can loan money to other people, is to make sure that you're keeping money safely available to you to cover for any unexpected events. And we can't really assume that these things are not going to happen, and you don't want to have all of your money under your mattress either. And that's because then you're going to the other extreme, and that's not safe. So we want to have some cash available. And if I had to choose what amount that would be to have available to you, I guess I would say at least 1 month of cash for you in your home, somewhere that you could actually get to and that it is protected. And then also having cash reserves available to you, like at least 3 to 6 months of your expenses available to you in an account that is not for your future. Like your retirement account is not your emergency fund. That is not your cash reserve. That is not your liquid money. Your retirement account, of course, is for the future. That's where you're investing for long-term growth. So the funds that we're talking about, having a cash reserve to carry you through any major disruption in the financial markets, of having liquidity, we're talking about having that money available in even if you're not getting a lot of return on your savings, this is where the savings account comes in. If you're retired, you may feel comfortable with having an even larger reserve, and you may want to have 1 to even 3 years of your expenses that exceed your pension income, your Social Security. So if you have expenses that are not covered by your guaranteed income, then those expenses would be what you need to make sure that you have available to you in your cash reserve accounts. And the reason here is that you want to have enough money to take care of yourself, your family, if there was a huge change in the economic situation of our country, and there was a limited, and you wouldn't want to have to sell your long-term investments because you are not, because you don't have the money available to you in a reserve. Because of course, if something like this happens, we're going to see volatility in the marketplace. You're going to see the stock market adjust due to this tragedy. So if you have to pay your bills through the stock market at that time, what are you doing? You're actually getting less money for your investments during that time. So you're really selling at a time where, if we really think about it, it may be a great opportunity to be buying. So I want to think about that. We need to have a reserve so that money will cover any major changes in the economy that may be due to a terrorist attack or event of terrorism in our country, even other countries. Terrorism is affecting us. So let's look at some other points. A second one would be, now we just talked about the importance of having cash on hand as a way to protect yourself, but we also want to think about knowing your risk tolerance. Looking at jbbryan.com, there's a free risk calculator on there for you to, you put in a lump sum of money and it allows you to adjust of, are you able to, would you be comfortable with your money going down in this amount in exchange for the possibility of it going up for a certain amount? Because a lot of times we only think about making money, but in exchange for allowing yourself to have greater growth potential, we're actually making investments into things that are going to have more volatility in many situations. So that means that for that potential high gain, you actually have a potential for additional loss. Or so those are the risk calculator that is on our website, the jbbryan.com website, which you can go to AfroEconomics and just click through to the corporate website, and you'll see that you can do the calculator right there, and it will lead to an analysis that is sent to me via email, and I will call you and we can discuss it together. But risk tolerance is, knowing your risk tolerance is very important, because we need to realize that if we do have a terrorist attack, or we have an attack in a country and it impacts our financial markets, or do you have a tolerance level where you could actually stomach that and stay the course because of that volatility that may be created for that? Or do you can't stand volatility and you're going to lose sleep? And we need to make sure that you're familiar with yourself. You've got to know your own risk tolerance. You got to know yourself. It's like, some people are not comfortable driving on the highway. Some people only want to ride in the inner city, but they don't realize there's certain risks involved in riding in the inner city as well. So we need to know that there's certain risk involved in being too conservative, and there's certain risk involved in being too aggressive. So amazing. I could talk about this stuff forever. So a third point would be to know your investment style, and to know how your portfolio is designed, to know your asset allocation. And the asset allocation is what asset classes are making up your investment portfolio. Generally speaking, your asset classes that you choose have a greater impact on your investment return over the long term, we've seen through research, than your actual return that comes from your market timing of when you go in and when you go in and buy and you go in and sell. Your asset classes that you're buying and selling have a tremendous impact on the return that you get as an investor. So you need to be in tune with what asset classes are you using, and are those asset classes that make up your investment portfolio appropriate for your risk tolerance. So we have to be knowledgeable and understanding, because certain asset allocations will be more volatile during these times that we're talking about. The possibility they will be affected more. For example, if you have the majority of your assets in a stock portfolio and the stock market is impacted dramatically by some unexpected event of terrorism, then the stock market, dips, and then your portfolio, because it's made up of the majority of your portfolio is stocks, what's going to happen? You're going to feel the impact more. So you need to know that your asset allocation is exposing you to more risk or more volatility, more potential of volatility than a portfolio that may be made up of more bonds, and depending on which type of bonds, but just say it was 90% government securities and the other 10% were only in cash. So that portfolio is not going to move in accordance to the stock market as much as a portfolio made up of a lot of stocks. So we need to know and be conscious of the risk, the return, the reward that we're expecting, and the volatility that we're exposed through the portfolio that we have, and know what we're investing in. Too often we have the investment accounts at work, but you're not familiar with the investment portfolio, or it's just something that you chose many years ago and you're not in tune with it. Well, the good thing about the times that we're in right now, if you're an intelligent investor, it is time to really embrace your portfolio asset allocation. How am I dividing up that IRA? What asset classes do I have in this IRA? That's why they give that little pie chart now on the statements and everything. Well, you need to know what it means. Like, I had a client that I have been working with, and was a new person. She came in, and I started discussing her portfolio, and I started explaining to her that yes, it says that she has like this percentage, say 60% in the equities or stock portion, but what are those stocks that you're in? So I, showed her that she was in some very, very high risk, stocks in there. So it's not just what asset class you're in, but what part of that asset class you're in. So stocks are just like shoes. So you can go in to shop for shoes, but then you have categories of shoes, correct? So you have your flats and you have your stilettos and you have, all those in between. So let's just say a high risk stock is the stiletto, and then the flat is just a blue chip, large, company stock, US based, that pays out a high dividend. But you find out that your portfolio is mostly into stiletto type stocks. Like and you didn't even know. You just thought that you were in stocks. So we need to be in tune with what makes up that asset class that we have. Just like bonds that are issued by corporations that are seen as a lot more risky than a government bond. It's highly likely that the government is going to pay the interest that it promised. But if you might have all of these corporate bonds that are making up your portfolio, and that your portfolio, when you're thinking, well, I just have bonds, those bonds that are corporate bonds may be impacted by the volatility and what that is created through a terrorist attack just as much as your stocks in your portfolio. So we need to be very in tune with what we have in that portfolio, not just what's in it. Even if you have mutual funds, too often we think that because we have these mutual funds, that all mutual funds are the same, and all mutual funds are not the same. They're not. So we need to make sure that what is that mutual fund? What is that mutual fund made up of? What is that mutual fund a stiletto type stock? Is it a high risk stock mutual fund? What is my portfolio design and how is it made up? And I keep getting a call in because we have the conference call going on at the same time. And I picked up and then I hung up, and I think the receptionist is like, oh, I don't know what they're doing. And Erin is over here. She can't get to it. The door's closed and no one can help us. So it's all good. So if it doesn't bother you, it doesn't bother me. So portfolio design and your portfolio structure and your asset allocation are very important things for you to understand during the times that we are now in, during any times that we're in. It's very important to be in tune with that. So we're talking about terrorism and your money, and we're talking about how your portfolio will be impacted based on the asset classes that you chose, how it will be impacted by a unexpected change in our economy, unexpected change in the corporate environment and the government spending and things that will may be created by a terrorist attack. But the truth of the matter is, we always need to know these things. We always need to have a cash reserve. We always need to know our risk tolerance. We always need to know what's in our investment portfolio. So we're going to turn these lemons, we're going to turn these lemons into lemonade, and we're going to maximize this experience. And then another point that I have here to share with you is to many times the best thing to do in these type of situations is the best thing to do is make what you don't do. It's like sometimes that if you're positioned correctly, then the best thing to do in an unexpected terrorist situation is to stay the course. And the way that you can stay the course is by making sure that you have the cash reserve that you need. Remember, I spoke a little earlier about, because if you don't have the cash reserve, then you're in these times and you're having to sell investments while the market is down, and you're not able to stay the course really, because you're not able to get through this dip in volatility because you need the cash now because you didn't have the reserve that you needed. So we need to, because typically, we've been through some really hard times, and we were like in 9/11, and the market, it does recover. We've been good about that. About if you look at, we've gone through a lot of things historically that people probably thought, oh, we'll never recover from this, but we have. So when the stock market closed during 9/11, after 9/11, and when it reopened, that it had actually, it had some down selling, but by us being able to actually slow down, and then imagine if you had money in that market and then the market closed and then you wanted to sell at that particular time. Now, fortunately, I didn't have any clients that were like, I got to get it. I need money this week and I can't wait until it reopens on Monday, because we have no control over those things. But the key is that, thank God, they were in a relationship, that they had a financial advisor, that they had someone that they could call on, that we could have our big conference calls that we were having. And I have clients that remember that right now, that on 9/11, I was big and pregnant. And I remember, what we got to do. My office went right into gear, and we organized a conference call for that day. And you didn't have YouTube; it would have been live had it been, today. But that was some time ago. Wow! But it was just the communicating, having someone to communicate, knowing that they had the reserve, knowing that their investments were appropriately invested. For many, it was just having someone to talk to, so having a professional that you can run things by. It really does pay off if you're trying to decide between, should I stay the course, or is the sky falling? Is this the end of the world? But, in reality, if it's the end of the world, who cares? There's not too much you can do with the money anyway. So, hey, I think that's really sad, but true. So, but we won't really care if it's come to that. I don't think that you'll be thinking about your money at that point. So we're going to know that it's important in many situations to make sure that many of these tragic situations, to stay the course for your long-term goals, because it's not the best thing to do to make changes that impact you over the long term just due to short-term changes. So what's happening right now, we can't allow that to determine how our life is going to be years down the road. So we have to continue to do what I call dollar cost averaging, which means those of you who are still working and accumulating, dollar cost averaging allows you to take advantage of market downturns. So if the market is open and there's a bad when there's a terrorist attack, and that these particular investments were good yesterday before the terrorist attack, I mean, my goodness, why is that company any worse than it was yesterday? It's just the price of that investment is down lower. So dollar cost averaging allows you, if you're systematically always investing, then you're able to take advantage of those lower stock prices. So that's all a part of, maybe in times like this, the best thing to do is what you decide not to do. And let's look at some more. What about documents? What do you have? What documents do you have available? How organized are you? And one thing that I would like to do is to figure out the perfect cloud place to keep my personal documents, like copies of life insurances policies, copies of financial statements, copies of corporate documents, copies of your corporate stock certificates, copies of any individual stock certificates that you may have. If you're not, I encourage people to not keep stock certificates at home. You can get those to your financial advisor, and then you can get them into a brokerage account for you, so that. But we have a comment, but documents and taking advantage of the digital age as a backup place for having your documents available to you if you had to leave your home, and hopefully you can still get online, then there'll be, you would have access to your documents. Yes.
The question is from Marcus Wright's team.
Yes.
It says, if we have a massive terrorism attack.
Marcus Wright's team has a question of, if we had a massive terrorist attack.
And the financial bank system collapse.
And the bank system collapse.
And the banking system needs another bailout. What are the best investments that will stay constant and solid? He
said, what if the financial markets needed another bailout, what would be the best investments to invest in? The best investment at that point would be for Marcus to make sure that he's talking to JB Bryan, his financial advisor. And I would be in tune with his, if that were my client, I would be in tune with his particular risk tolerance level, what his long-term goals are. And I mean, just theoretically, that if the stock prices of that particular industry were dramatically down, and we knew beyond a shadow of a doubt that they were going to get another bailout, and then that would be impossible to know, but just say, and he said, oh, they're going to get another bailout, and this is terrible. The biggest challenge might be is to figure out which financial institutions is going to probably get the bailout first, or not even need the bailout, but their stock price is down. Look, we start looking for value possibly in the industry that's getting hurt the most. So, I mean, that Sir John Templeton, he made his entire career of buying what is out of favor, instead of always looking for what is in favor. Because if you only think of, what's going to benefit right now, where their prices are actually going to be higher right then. But if you look at what is hurting right now, but it will be better, because stocks are long-term investments. So we do want to buy things based on getting the best price and their long-term appreciation in that stock price. So that, interesting question, but it would definitely take some thought, because it depends on how you approach it, how you want to approach it, and getting deeper into the investor's head. Interesting question, and I hope it doesn't happen. Also, let's look at, so we were just talking about your financial documents, and making sure that you have those things available to you. And then the consideration of having your financial documents digitized. It could be as simple as, I know one thing that I could do is I have an app that on my phone that allows me to turn everything it takes a picture of into a PDF. So if I take a picture of, and I think I'm gonna do that today, like take a picture of, like, say, all the birth certificates that I have and put them into a PDF and make them into a file, then I immediately already have a cloud-based system. You know, I can even take it, email it to myself, and I could email it to myself, and then it would be in the system. But you might, be able to, because the email is going to store it. So, but email might not be the safest place. Like the storage companies for the document storage people might be like, well, that's not really the best place to have it because emails aren't really safe and blah, 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 blah. But we're talking about things where I just need it so that I will know the policy numbers. Or I would need to know the birth certificate information or things like that. So you would just need it, but you're not talking about documents where somebody, if it was a loan application or something like that, no, you might not want to store, but you wouldn't need that at this situation. You just may need a copy of your title for your home, all of the proofs of ownership, proofs, rental lease documents, things like that, things that are just for your own protection, your statements, your most recent statement from your financial things. But we're getting pretty deep there, but it's not just for a terrorist attack. We really need to have copies of those documents anyway, because it's amazing how many times I have allowed technology to actually help me by having a copy of things on my phone. Like I've gotten to the point now where I'll take a picture of anything I think that I'm going to need later. Do you do that too? Or just do a screenshot and then you'll have that in your picture. And then I just switched telephones, and the telephone switched everything that I had on the cloud from the other phone over to the new phone. Amazing. So I guess the phone also, if you take all these pictures and you have a cloud on your phone, that's a backup also. So it's amazing. I know that so many colleges now are doing programs for people who they have like a certification. I know that University of Virginia was telling me during our last reunion weekend that they're going to do a certification on document storage. And that's going to be, so you might have like a business degree with a certification in document storage or marketing and but I mean, that's pretty high, because as paperless as we say we are, we still have paper everywhere, but we are trying to move, more paperless, probably mostly just for a backup, for more protection for yourself. Mm-hmm. Do we have any questions on the conference call? I heard someone say something. Did you want to ask a question? So the also maybe they just didn't mute their phone, but we're good. So then also, before you all leave me, as I'm at 12:28, we talked about the important documents and finally the bottom line is that you really need to have a financial advisor so that you can talk to them about, if there were a terrorist attack, what should I expect? What will happen with my portfolio? What type of protection do I have in my portfolio? What are the asset classes in my portfolio? What is my financial plan? You need to really manage yourself. If you don't look out for your financial future first, then no one else can, because I know that the best clients are the clients that really want to be financially healthy. It's just like going to the gym. If you had a trainer, the trainer really can't help you if you don't show up. So show up for yourself, show up for your financial future, do what you can for yourself, right? Do that first. So we talked about having how to protect your money during any possibility of market movement, terrorist attack, is to make sure that you have cash reserve on hand, know your risk tolerance, know your investment style and portfolio structure. Many times the best thing to do is what you don't do. Know where your important documents are, and then also bring in a financial advisor into your life. Hopefully it will be me. I am JB Bryan, the creator of AfroEconomics. Please visit AfroEconomics.com, and you can download the app for AfroEconomics right there at the AfroEconomics.com, and that will allow us to keep in touch better. There's a way you can register for our AfroEconomics updates that we send out as well. Subscribe to the YouTube channel, and please press like. I meant to ask you at the beginning to press like, then you could be on a really positive place. So, but I hope you really enjoyed this session, and then click like and subscribe to the JB Bryan AfroEconomics YouTube channel. And next week we're going to talk about sabotages, how you can sabotage your retirement, and we're going to talk about not doing it. So we'll say stop sabotaging your retirement, and we're going to make sure we don't do that. See you soon next Wednesday. Happy holidays, and let's make sure we keep it going. Let's make sure we keep it going and prepare appropriately for 2016. This is the time of year where only the strong survive. So let's be as strong now as we're going to be in January 2016. So let's keep pushing through. Thank you for the opportunity to share with you. God bless you. Love you all. Take care.